Good afternoon, Mortgage Coach users. My name is Lakeisha Grant. I am a Success Coach Account Manager here in our Success team. I'm delighted to be with everyone this afternoon. We're continuing forward with our winter workshop where we're talking about different strategies and tools that you can use with Mortgage Coach Edge, ways that you can incorporate these different strategies into your everyday way of doing business to be able to maximize your exposure, build that relationship with your realtor partners and your clients that you come in contact with, and be able to solidify yourself as their trusted advisor, delivering that finance option advice to each and every client that you come in contact with. It's very important in the industry. You want to stay ahead of the game and make sure that all of your clients know exactly what all their options is as they move forward with their home ownership dream. This afternoon, we're going to talk a little bit about showing clients comparisons with MI versus no MI. We're going to actually build this total cost analysis out, so I encourage each and every one of you to follow along with me as we build out this particular report, and then we'll talk about the report after we build it out in the end, and then I'll leave a little bit of time to have some Q&A session. I do have the question box open, so if you have any questions throughout the call, go ahead and put them in the question box. But just remember that if after the call you have questions, send us an email over at support@mortgagecoach.com, and we'll make sure that all your questions and concerns are answered. As I go into Edge, I'm going to go straight to our home screen, and one thing that I want to point out before we start building out this report is our help option. By clicking on that help option from anywhere inside the system, it will link you right over to the Mortgage Coach Support website. There we have some quick reference links with our event calendar. We also have the Rate Watch login screen. We have access to our YouTube channel where you can view some of our past calls and trainings that we've had. We also have recommended playlists where we have our Mortgage Coach scripts available where you can go in there and get some coaching and ideas on email scripting and so forth from some of the industry leaders. We also have our coaching call archive where you can go in and view the coaching calls that we host on Tuesdays and Thursdays with our CEO, Dave Savage. So I encourage you to go into this Mortgage Coach Support website and use it to your advantage to be able to get more information, incorporate mortgage coaching to your everyday way of doing business. I'm going to go ahead and go right back into Edge, and on our home screen, for those of you following along, we're going to go ahead and start building out this MI presentation for our borrowers. Let's go ahead and click on New Client. As you're brought into the screen, as I've talked about previously in the past on other coaching calls or other training calls, is that you have those red and black fields. Those red fields provide the direction. The black fields support the direction that you're moving in. So again, it's not always imperative that you fill out each and every black field, but sometimes filling out those fields will actually direct or support the direction that you're moving in. So the first thing we're going to do here is go ahead and put in our borrower's first name. Remember on this screen, by putting in a borrower's first name, it will save your report as you move forward. I'm going to jump right down to our friendly name field here where I'm going to go ahead and call this particular report that we're building out MI versus no MI. So remember, by putting a name in the friendly name field, this will help you distinguish the difference between the reports that you've created for one client or even a realtor partner. So you don't have to complete a new report each and every time. You can use the copy analysis or add analysis feature. I'm going to go ahead and move forward to our Goals tab where I'm going to select Purchase since we are doing a purchase scenario. Move right forward to our Assumptions tab, and I'm going to go ahead and put in a purchase price. Maybe this particular borrower was purchasing at $350,000. Then I'm going to skip our Affordabilities tab altogether because I want to be able to create my report in 2 to 5 minutes. So I'm going to go straight to our Products tab. On this first product, I'm going to go ahead and build out a conventional 5% down with MI. I'm going to go ahead and move right down to putting in my purchase price of $350,000. I'm going to put in my down payment, 5%. Notice that it automatically subtracted my down payment and gave me a base loan amount. I'm going to now put in an interest rate here, put in a term, and then leave my loan type as fixed and move right forward to my Closing Cost tab where I can go ahead and pull in from my closing cost details pull down from my drop down of maybe some closing costs or fee templates that you guys have already built out. So make sure that you guys build out those different fee templates so that you can quickly pull down from those fees and not have to enter in each fee individually. But if you haven't built out your fee templates, you can always go ahead and add fees or add custom fees. Once you have all of your fees in place that you want to build for that particular template, just click on that Save As Template button, and you'll be able to save that particular fee template to use at a later date. Once you have all your fees in place, go ahead and click on that Apply to Loan. It's automatically going to bring over your fees. You can go ahead and put in your prepaid interest in days. Notice that when you hover your mouse back over that prepaid interest field, it does show the cumulative dollar amount. I'm going to go ahead and advance right forward to my monthly cost screen, where I'm going to put in my hazard insurance percentage at 0.25, maybe my property tax percentage is 1.25, and then I'm going to put in my mortgage insurance percentage for this conventional 5% down. I'm going to go ahead and jump right down and put it in my hazard reserves, my tax reserves, and then since this is a purchase, I want to collect a 12-month premium in addition to collecting my reserves. So I'm going to click that box that says Collect 12-month Premium. Now I'm finished building that first product, and I want to compare this product to yet another product. Maybe I want to show now a conventional 5% down with buying out the MI. So I'm going to go ahead and click on Add Product to add yet another product to compare to. I'm going to call this particular product Conventional 5% with no MI. Now just remember, with your product names, you want to be very specific. You want to put something in the product name that your borrower is going to be able to understand and know exactly what it is that you're showing to them. Now, since I've already built out my conventional 5% with MI, what I want to do is use my Copy From feature by clicking on that Copy From button. I can pull over all the data that I put in for my 5% down, and now I just need to make some minor adjustments. Now at this point, you might be showing this particular buyer either buying out the MI, or you can show them lender paid MI. If it's lender paid MI, you're just going to simply increase the rate. But a good way of showing maybe MI with the buyer buying it out is by you manipulating the system a little bit, because you want on your report for your client to be able to see MI and not add it to the loan amount, but you want to be able to show that that's an upfront cost to them for that mortgage insurance that they're going to have to pay. So what I'm going to do is manipulate the system by going ahead and selecting my yes, that this is an FHA, even though it isn't. I want to get that upfront MI field. Your interest rate might change a little bit because they're buying out the MI. You can advance right forward to your closing costs. Notice that it automatically brought over your closing costs since we did put in that Copy From feature, but now we're going to put in our upfront amount. So maybe it's going to cost your borrower 1 point to be able to buy out that MI, so I'm going to simply put in that 1 point there. But at this point, I'm not going to add that upfront MI to the loan amount, since this is just an amount that I want them to come in with upfront. I'm going to go ahead and advance right forward to my monthly cost screen, where it automatically brought over all my monthly costs. I need to make an adjustment and take out that MI factor. So simply click on that $% sign, remove the MI factor, and then now you're done creating that second product to be able to compare to, showing that no MI factor there. Now maybe you want to add a third product. Maybe you want to show an 80-10-10. So I'm going to click on Add Product to add yet another product. This one I'm going to go ahead and put this product name as 80-10-10. Now I want to copy some of my information over so that I don't have to use or manually put in all the information. So again, I'm going to use my Copy From feature. I can copy either from my MI or no MI. I'm going to go ahead and copy from my no MI, so it automatically takes out my MI on my monthly cost screen. Click the OK button. First thing I'm going to do is change this back to no, it's not an FHA loan. That way it removes that upfront MI field. And then the next thing I'm going to do is I'm going to go ahead and change my down payment. This time I'm going to change my down payment to 20%, because I'm going to build in a second here. So what I'm going to tell the system is that the borrower is putting down a 10% down payment, and the other 10% is coming from a second loan. So first, I'm going to put in my 20% down payment, and then I'm going to show you how to build in that 10% for that second loan. Put in your interest rate. Maybe the interest rate for this particular one is just an even 4%, since we're doing an 80-10-10. And you can go ahead and advance right forward. Notice that you no longer have that upfront MI field since we told the system it's no longer an FHA loan. Moving right forward to your monthly costs, you don't have your MI factor built in there because we copied from our no MI loan. But on this screen, what we want to do now is go ahead and select yes, that there is a second lien attached to this loan. Notice that once we selected yes, it removed that add another product. Reason being is because now we have to put in some information about our second loan. So we're going to go ahead and advance right forward, and it's going to bring us up to our second loan information where we're going to start putting in our loan amount. I'm going to put in the interest rate for this second lien. I'm going to put in the term. Maybe it's a 20-year loan. You put in your loan type, if it's fixed or an ARM. If you select ARM, you will put in some ARM details that's associated. For now, I'm going to go ahead and leave it selected as fixed and move right forward. Now you're going to put in some costs that may be associated with your second lien. So let's just say we have a $500 APR cost for this. And if you decide you want to add yet another product, a fourth product, to be able to compare to, you now have your Add Product button down at the bottom. So I'm going to go ahead and advance right forward. So I've added 3 different products to show on my report. And then I come to my analysis summary screen. Just remember, guys, on your analysis summary screen, you have the option of changing out your property appreciation rate according to the market area. It's defaulted to show 3%. You change your short-term analysis in months, your long-term analysis in years, and then your benchmarks are already selected to show the highest savings. So right now on your monthly savings, by your borrower going with that 80-10-10, they have a $353 savings by going with an 80-10-10. Notice that down on your long-term section, you have your radio buttons here. So you can tailor your report to show your borrower either their total net worth, their total principal paid, or their total interest in MI for each individual product. I'm going to go ahead and advance right forward to my contact screen. Now remember, there is a notification feature that's built in, so your borrower does have the option, or you do have the option of putting in your borrower's contact information. So when you receive that alert notification, you will have the option of being able to contact them right away because their contact information is going to come on that alert notification. You put in the property address for the property they're buying, so maybe it's 123 Main Street. Then you'd advance right forward to that first presentation page where you're going to select how you're going to show this presentation to your client. You're going to either select that total cost analysis, you can show them a seller buy down, you can even show them an amortization schedule for each individual product, and you also have your Fannie Mae export. If you decide that you don't want to show a particular product, you can simply uncheck that product and it will not show on your report. So just remember, you can't actually delete any of the products you built out, but you can uncheck it to not show in the report. Then you have your payment notes section down at the bottom, which is a good compliance piece here. You can let your borrowers know if the taxes and insurance is included in the monthly payment. It will show in the report with that double asterisk. Now I want to go ahead and quickly move to that final presentation tab where I'm going to generate the link and send it out to my borrower. To quickly navigate through any of the tabs, you can just highlight your mouse over the tab. If there's multiple pages associated with that particular tab, you get those jump buttons. You could quickly jump to that particular page. So I want to go ahead and jump to my preview page to get to that final presentation page where I can select how I'm going to send my presentation out. You have the option of saving as a PDF, printing, but we do recommend you email the link so that you can notify yourself when that report has been viewed, and also so that you can quickly deliver the information to your client. You're going to go ahead and click on that quote date to remind yourself and your borrower when you created this report, and then you're going to click on that Generate Link button where you're going to go ahead and generate that personalized link, copy and paste, and send off to a separate email to your client. So just remember, we don't send any reports for you on your behalf. We actually allow you to be able to personalize it and send those reports out. Now when you're ready to go ahead and deliver your report to your client, maybe you want to talk to them on real time, you can always go into Edge Live, or by clicking out of that report link, you can click on that preview button as well. It will still bring up your completed report, and you can deliver your report in real time to your client. So let's talk about this completed report that we have. But before we start talking about the report, I'm going to go to our question box. This is you guys' opportunity to go ahead and put your questions in the chat box so I can make sure that I answer them. We do have a question that did come in. It said, how would you enter a HELOC with a 10-year interest-only period amortized over 20 years? All right, so let me go right back into Edge, and I'm going to go back to our product screen. Now remember I told you that you can hover your mouse, and if there's multiple pages associated, you can jump straight to that particular page. So this particular question is directed towards our 80-10-10. So I'm going to go ahead and go straight to our 80-10-10. I'm going to go forward to our second lien. Now on this second lien here, notice that it does say if this is an interest only, how many months is it an interest only period? So you can change the interest only months, you can enter in the interest only in months. If you decide that this is an ARM, you would go ahead and select ARM, and then you would put in those ARM details. So by clicking on ARM details, you can then go ahead and put the first adjustment percentage, the first adjustment month, but just remember that when you're putting in the first adjustment month, it's going to be the first month after the fixed period. So just remember that you guys can put in an ARM details on there as well, or you can go ahead and change your interest only in months if, for example, this particular loan would be fixed for a certain amount of time and would adjust after that. Next question says, how can I show a grant for a down payment? So I'm going to go ahead and just use one of our other, let's say I'm going to use this conventional 5% down as an example. So now you might have a borrower where, or you might have a file where that 5%, they're putting a 5% down payment, but that 5% is coming from somewhere else. So you want to show your client, and this is the way that I recommend doing it, but you do have the option of putting it in a different way. I'm going to show you the way that I recommend, and then I'll tell you about the second way. I recommend going ahead and putting that down payment percentage so that you can show your borrowers that they do have to come in with that down payment of 5%. When you advance forward to your closing cost tab on your closing cost details, you can go ahead and add a custom fee here. So click on Add Custom Fee, and then you can give that custom fee any type of name. So I'm going to go ahead and type in Down Payment Assistance, and then you would click the OK button. Now down at the bottom, you're going to have that fee display. Now you're going to put this fee in as a negative dollar amount. So if your down payment, let's just say the client, or say the company or grant company is giving your client maybe $10,000 towards their down payment, you can go ahead and put it in as a negative dollar amount. You can select who's going to be paying for that particular fee. Now notice that you only have the option of selecting borrower, lender, seller, or broker. Now it may be coming from a city program, so you don't have city listed here. So I would just go ahead and select broker, and then when you're explaining that fee on your audio recording, or when you're having that conversation with your borrower, just let them know that that broker fee is actually from the city. Once you go ahead and tab out of that fee, you'll notice that now that fee has been removed from the borrower, and now it's being applied towards the broker or outside party that's actually paying for that particular fee. If you decide you don't want to have that fee in there, you can always click on that trash can button, and it will remove the fee just that quick. I'm going to go ahead and show you the second way that you could be able to show that down payment assistance is by just removing that down payment altogether. But you don't actually show to your borrower that they had a down payment that they were responsible for, but the city or whomever gave them some type of credit towards that. So you have the option of being able to show it either way. So thanks, Carl. It looks like that answered your question. And it says, how can you show a down payment assistance with a second and no payment? So if you have, a lot of you have where the borrower's doing a silent second program. Maybe the city's giving them a 20% down payment, and if they were to move out of the house, they would have a payment on there. The one way that you can do it is you can build in that second, how we did on that 80-10-10, but instead of putting in an interest rate on there, you would not show an actual rate or term, and it wouldn't show payment, but it would still show that they have that silent second there available as it would show that they have that silent second, or that they have a second attached to this loan. All right, so keep the questions coming, guys. I'm going to go back into our report so that we can go ahead and explain and talk about this report. So notice that the final total cost analysis is separated out into 4 different quadrants. You have your summary section, which is your complete overview. I know we've talked about this in the past, so you guys know exactly what this summary section is showing. But it is giving you that complete overview for each individual product, showing your borrowers their loan amount, the APR, the term. It's even showing them their payments and their freedom points on that first and second. When they click on that More Info button, they're able to see on that payment breakdown the P&I for the first, the P&I for the second, the property taxes, hazard insurance, mortgage insurance. Closing cost tab shows them their loan to value, their down payment, their total APR, non-APR costs, and so forth. They can even click on that Fee Details button to get an itemized list of all of the costs that's associated with the loan, knowing who's paying for that cost, what of that cost is considered APR, what of the cost is prepaid escrows, and what of the cost is being financed into the loan. You also have that Adjust Reinvestment Strategy tab where you're showing your borrowers in this top section how they can reinvest back into the principal. Middle section is showing them how they can reinvest into a short term, and the bottom section is showing how they can reinvest into a long-term savings account. And then your blue graph section is that immediate impact. It's showing your borrowers on a monthly basis which one of these products is going to give them the highest savings. Jumping right down to your savings over 60 months area here, this is your short-term savings. Again, you have the option of being able to tailor this out and show a different monthly period if you decided to do so. But in that More Info button, that's where you're showing the borrower that interest in MI, the closing costs. That's the cost they're not going to recover. So this is what this particular section is showing them. It's showing them the cost they're not going to recover and which one of those is going to have the highest net savings for each individual product. And then that long-term savings is showing your borrower either that interest in MI, that total net worth, or that total principal paid over that yearly period that you've tailored out for them. So it's showing your borrower if they were to go with that conventional 5% down with MI, they would be paying $208,000 versus going with that 8-10-10, they'd be paying less in interest in MI alone. By clicking on that More Info button, you can show your borrowers how you've calculated their home value and their loan balance and their equity, their total principal paid and their total PITI paid. Just remember that that home value is calculated based off of the property appreciation rate that you built in on that analysis summary screen. So be sure to check your market areas to determine if that home value is accurate. So remember, your client has the option of still being able to save this report. They can print, or they can even share the link that you've sent them for this report and send it out to any of their family members or friends that they'd like to share the report with as well. A lot of questions come about the disclosures. So whenever your client enters in the report, one thing that they have to do first is click on an I understand button. So before they can even view your report, you will have, or they will have this disclosure that pops up for them. They actually have to click on that I understand button before they can view the report. So it does cover you from a compliance factor. It does say that interest rates are estimated and so forth. So it does cover you disclosure-wise. So without further ado, if you guys have any questions, please enter them into the chat box. We have a couple more minutes left. Want to let you know that we're continuing to go forward with our winter workshop. We will continue to show you different tools and different strategies that you can use with Mortgage Coach. If you have questions after the call, again, you can always send them to us at support@mortgagecoach.com. I will go ahead and put that email address, again, that's support@mortgagecoach.com. If you have questions or just want some feedback on some of the reports that you've been completing, go ahead and send them over to us. We will review each and every report that you send over, and we will provide you some feedback. So I want to thank you guys for continuing to attend our winter workshop. We're going to continue forward and show you more different tools and strategies that you can use with Mortgage Coach. Visit our event calendar, sign up for our coaching calls that we host on Tuesdays and Thursdays, even some of the other training calls that we host throughout the month, and our winter workshop. Thanks everyone for joining. Just remember, we're here to build that business of success with you. So let us know. We can assist you in any way with incorporating Mortgage Coach into your everyday way of doing business. Thanks everyone, and enjoy the rest of your week.